Hello future charters. Welcome to paper discussion series by More Academy. In the previous video, we have discussed question number 1A from December 2021 question paper of accounting. In this video, I'm going to discuss the suggested answer for the second sub question of question number 1. Don't forget to subscribe to this channel so that you will get notification for each new video that I'll be adding for your reference. So let us now start with question number 1B. This question carries 4 marks. It is a pure calculation question. No journal, no ledger, no tallying of balance sheet, just plain simple calculation for stock valuation by weighted average method. So here we go. Question number 1B. The following are the details of spare parts of an oil mill. 1/1/2021 opening inventory nil. 1/1/2021 purchases 10 units at rupees 300 per unit. 15/1/2021 issued for consumption 5 units. 1/2/2021 purchases 20 units at rupees 400 per unit. 15/2/2021 issued for consumption 10 units, and 20th/2/2021 issued for consumption 10 units. Find out the value of inventory as on 31st of March 2021 if the company follows weighted average method. So it's a question of 4 marks. Now what are the points which you should observe immediately while you are reading the question? The first point is the problem has asked us to follow weighted average method. It's a very simple observation. It is given in the last line. The transactions are already given in date-wise order. So first is 1/1, then again 1/1, then 15/1, then 1/2, then 15/2 and 20/2. Exactly in the order of dates. So there is no need to rearrange this transactions. Sometimes the problem may give you all purchases together and all sales together. In such a situation, you are required to rearrange the transactions in the order in which they occurred. But our problem is very simple. It has given all the transactions in a date-wise manner. There are no purchase returns. This is a very good thing of the problem. If there are purchase returns, we are required to think a lot about how to apply weighted average. Anyway, in CA foundation, those kind of adjustments are generally not asked, and this problem also they have not asked the adjustment of purchase returns. Under weighted average method, the weighted average rate is calculated at the time of every new receipt or every new purchase. The method of calculation of weighted rate involves following steps. 3 steps are there. Take the total of amount, take the total of quantity, total amount as per step 1 upon total quantity as per step 2 is equal to weighted rate. And then this weighted rate is used for all the next issues till the time there is no new receipt. So weighted rate is calculated at the time of every new receipt, not at the time of issue. I'm repeating again, weighted rate is used or calculated, weighted rate is calculated at the time of every new receipt. And how to calculate weighted rate? Take the total of amount column, take the total of quantity column, total amount upon total quantity is equal to weighted rate. So based on these different points, let us now start with the discussion of the solution. Solution will be obviously made up of what? There will be 3 different parts. One is receipt column, one is issue column, and one is balance column. And in those columns, we are going to record these transactions which are given by the problem, and we are going to apply the point number 4 which I have discussed just now. As you can see here, they have shown us first date column, then there is receipts column, issue column and balance column. In receipts as well as issue as well as balance, there are 3 subparts: units, rate, amount, or you can say quantity, rate, amount. On 1/1/21, there was opening balance of nil. That's why the balance is shown to be nil. Then on 1/1/21 again, there are purchases 10 units at rupees 300 per unit. So 1/1/21 receipts, because purchases involve receipt of the units, 10 units at 300, that comes to 3000. There is no opening balance. So no opening balance and purchases, no opening balance and receipts. That means the current purchases, current receipt will be resulting into the closing balance. So the closing balance is exactly equal to receipt on 1/1/21, 10, 300 and 3000. Then on 15/1/21 we are making issue. issue is for consumption 5 units. Remember, we have already discussed weighted rate is calculated at the time of every new receipt, and here we are making issue. We are making issue for consumption. That means there is no need to calculate weighted rate. The rate which was applied or available on 1121 can be applied to the issue quantity also. So 5 units into 300 is equal to 1500. We were having 10 units. We received nothing and we issued 5 units. So remaining are 5 units. They are all obviously at rupees 300 because there is no other rate. So 5 into 300 is equal to 1500 is the closing balance as on 15/1/2021. Then there is 1st of February 2021. What is happening on 1st of February? There is purchase. And remember, we have already mentioned at the time of every new receipt, we are required to calculate the weighted rate. So we are specifying first of all in the receipt column 20 units at rupees 400, that comes to 8000. Then we will specify 5 plus 20 is equal to 25. 1500 plus 8000 is equal to 9500. So take the total of amount 9500. Take the total of quantity 25. Total amount upon total quantity is equal to weighted rate. So the weighted rate is 380. I repeat, take the total of quantity 5 plus 20 is equal to 25. Take the total of amount 1500 plus 8000 is equal to 9500. Total amount upon total quantity is equal to weighted rate. So this is the new weighted rate 380. This weighted rate will be then applied by us for all the next issues till the time there is no new next receipt. But if you look at the problem carefully, you will understand that after 1st of February, there are two transactions and both of them are the transactions of issue. They are the transactions of consumption. There is no any other purchase which is happening after 1st of February. That means the need for calculation of weighted rate is now already over. Both these issues will be priced at the weighted rate of 380. So on 15th of February, 10 units at 380, 3800. Out of 25, 10 have gone, 15 are remaining. Rate is going to be same 380. So the value is 5700. And then again on 20th of February 2021, you are issuing 10 units. Again, they will be priced at the same rate because the new rate will be available only when new purchases take place. Now no new purchases are taking place, so the old rate will be continuing 380. That comes to 3800. Out of 15, 10 have gone, 5 are remaining. Rate is 380, so the value is 1900. They have asked us the value. Don't just prepare the statement with heading and then all the different details, but don't forget to write your final answer again. We'll specify here, therefore the value of inventory as on 31st of March 2021 is equal to 5 units at the rate of rupees 380 is equal to 1900. If you miss this last line, there is the chance that you will miss at least 1 mark. So please don't do that particular thing. Don't forget to write the heading, which particular company you are preparing the stock statement. Don't forget to write the basic working heading, then all the column headings properly, and once entire answer is completed, don't forget to write the answer as a separate sentence so that it will be easy for the examiner to give you full marks. Here we complete question number 1B. In the next video, I'll talk about question number 1C, which is again a theory question. So see you in the next video.